Assalamualaikum warahmatullahi wabarakatuh. In this video, we are going to share about zakat computation on stocks and short selling. Let's first begin by get to know what is zakat. Zakat is typically defined as a compulsory levy which is imposed on Muslims with surplus money or wealth. It is the belief of every Muslim that giving zakat will increase the prosperity of the zakat payer in this world and in the hereafter. Zakat is obligatory on Muslims as this is obligation to Allah. Failure to pay zakat is a debt to Allah, and this debt is due forever until fully paid. Normally, the zakat rate imposed is 2.5% of the zakatable assets. Now we already know a bit about zakat. Let's get to know what is stock. A stock, also known as equity, is a security that represents the ownership of a fraction of a corporation. This entitles the owner of the stock to a proportion of the corporation's assets and profits equal to how much stock they own. Majority confused when it comes to the difference of stocks or shares. Well, basically, investors purchase stocks while units or quantity of stock are called shares. Corporations issue stock to raise funds to operate their businesses. The holder of a stock, which is a shareholder, may have claim to a part of its assets and earnings. In other words, a shareholder is now an owner of the issuing company. Ownership is determined by the number of shares a person owns relative to the number of outstanding shares. In short, according to Islamic religion, shares or stocks are classified as zakatable assets. Therefore, there are several methods of computation of zakat on stocks. The first method is calculation based on market value. This method is used if a person holds resale shares. Then they need to pay zakat on the market value. Such shares in the same way that a trader pays zakat for resale in stock. The zakat payable rate is 2.5% of the entire portfolio for every year of the current market value during the date of zakat. The calculation method applied to this method is the current market value of all the shares equity traded within whole invested subtract the purchase price of the shares, then multiply with zakat rate. As an example, an individual who initially invested $20,000 shares in a company, with those shares worth $25,000, then the mathematical equation would be $25,000 minus $20,000 times 2.5% equals to $125. However, this method arises an issue of irrelevant if there are facts stating that you are not a stock trader. You should include the current market value of the share in the calculation of zakat to sell the stock after reaching a certain price. However, very few people buy shares with the intention to sell it.
The second method is calculate the zakat based on the current asset percentage or known as zakatable asset approach. This method is applicable for the shareholder who want to enjoy the dividend yield. So, the method is based on the percentage of investment that comprise short-term asset or current asset that are classified under the liquid terms. This portion of the investment is considered liquid and subject to zakat at full 2.5% at the end of haul, which is the minimum 1 hijrah calendar year and equal or exceeds the nisab, which is threshold. The rationale here is that the long-term or fixed assets are not zakatable assets, where generally they are not subject to zakat in Islam. For example, ABC company has 65% of assets. They are categorized as long-term or fixed asset, while 35% are otherwise. If the book value of the shares that has been invested is 50,000 ringgit, so the calculation should be 35% of 50,000 ringgit multiply the zakat rate of 2.5%. This formula of current asset percentage was extracted from a reliable website, namely Muslim Link Canada Online Hub, that was written by Khalid Sultan and published in Islamic Finance section. However, there is an issue for this method, which it cannot be readily applied when the underlying assets are not known specifically and individually.
The third approach in the calculation of zakat is based on the dividends of the shares. This method is relevant to investors who aim to benefit from the dividend returns from the shares. Therefore, the zakat calculated will be based on the dividends of the shares invested and not on the market value of shares itself. However, the term for haul and the rate for zakat remains the same, which is on the basis of one complete cycle of one Hijri year from the actual date of receiving dividends at the rate of 2.5%. Calculation of zakat based on dividend shares were extracted from the ruling of the Council of the Academy with regards to zakat on rented real estates and non-agricultural leased lands. On the other hand, the calculation of zakat based on dividend returns may cause some confusion to the investor due to the different dates of haul completed separately. It is important to take note that the payment dates for zakat is different based on the different purchase dates of the shares itself.
In our opinion, every method has its pros and cons. Therefore, we believe that any methods of zakat calculation chosen by an individual shareholder in order to compute the zakat payment on stocks strongly depend on the shareholder's preference, either to be the short-term trader or long-term investor. Nevertheless, all of us prefer the method of current asset percentage approach, since at the moment we were only interested in benefits from the return of the investment of shares acquired.
What is short selling? Short selling refers to a mechanism for a party to buy and sell shares that is not owned by them during the time of a trade. So the idea behind short selling is that the short seller may gain immediate profit from the purchase of a stock price at a lower price and then sell it at a higher price. So generally, this works well when there is a expected downtrend movement in a specific stock price in the market. Short selling is technically based on speculation, where the seller expects the price of the stocks will drop in the future and gain profit from the sale of the stocks. So next, how does short selling works? Firstly, the short seller will borrow stocks from party A, which is the owner of the stocks. Later, the stocks will then be sold to party B let's say at $50. After some time, when the stock price has dropped, the short seller will buy back from party B for, let's say, at $30. And then the stocks will then be returned back to party A, which is the initial owner of the stocks. So here, the short seller has made profit of $20 in short selling, which can be seen from the sale proceeds from the stocks. How does $20 of the profit is made? $50 of cost minus the $30 of the purchase. $30. So the short seller has made profit of $20 from short selling.
selling should not be made permissible in Islam because the contract is about selling an item which is not under the ownership of the seller. Many Sharia scholars disagree with the sale without owning the item because they base on the hadith from Prophet Muhammad that mention a seller is prohibited to sell an object which is not rightfully owned by them. This hadith is contradictory with the practice of short selling where the seller sells the security that they borrowed from the market without owning it. In addition, short selling also contradicts with the fundamental conditions of validity of the sale, which is the subject matter must be owned by the owner during the contract is concluded. If the contract does not comply with this condition, the sale and purchase contract is considered as invalid or fasid.
There are arguments on the permissibility on the short selling in Islam based on most jurists except Hanafi. This argument is about can the stock be a subject matter for a loan contract in the context of lending the stock. Most jurists have ruled that loans are appropriate for all products available for forward sale. This implies that all assets which can be defined as a liability of the borrower will be the subject of a loan contract. In addition, based on maslahah, the SAC used the fundamentals of istihsan as an exception to the general principle of ijarah, meaning that to allow the short seller to sell the lease stock to the third party, the exception should be made. In short, we are inclined to be on the opposite side, which is short selling should not be made permissible in Islam. Muslim scholars have stated that short selling is a contract of selling things that is not our own, and the transactions in short selling contains prohibited elements which is riba and gharar due to the fees charged to the stock's lender and the speculator's intention on selling the stock to get easy and quick money.